I think the results of today's report will take a little bit longer to digest than the trade thinks. The January report was such a shell shock to many in the industry. I think the market has learned it takes a little bit more time to diffuse the information coming from the USDA in order to get it into the proper slots and the proper framework of price discovery. But looking at today's report, I thought the numbers for corn and soybeans from a U.S. standpoint were relatively positive. They came in with the corn ending stocks of 1.719 billion bushels. That's below the trade estimate of 1.748 billion bushels, and the increase in usage of corn for ethanol by about 100 million bushels, I think it was a positive factor in that result, and shows that essentially these stocks of corn, not only here in the United States, but probably just as important, if not more important, globally, continue to decline. They came in with a global corn stocks number of 134.04 million metric tons versus the January estimate of 136.19. So there'll be some adjustments to that, I assume, based upon the results of the South American crop when it's harvested. But the point that I'm trying to make is we continue to see this very, very strong demand base from a global standpoint for corn and corn usage. And keep in mind, this global demand has come on the heels of 4 record crops out of the last 7 years as far as production. And it points out that the world, as well as the United States, seems to absorb this gradually and continuing increase yearly in corn production. So in essence, I thought the number for corn on the surface, at least from a numerical standpoint, should be a positive number. Looking at soybeans, here again we saw a decline in the ending stocks. They came in with 210 million bushels versus a trade estimate of 219 million. And we saw that the USDA felt that exports should be increased by about 25 million bushels, and they increased the crush by about 1 million bushels for a total of about a 35 million bushel decline from the previous January number. Keep in mind, though, they were looking for 219, so it's only about 9 million bushels less than the trade estimate, but still, at least on the surface, a positive number. Now, the problem child continues to be, at least so far, this wheat number. They did leave the USDA ending stocks of wheat at 981 million bushels. That, again, is above the trade estimate of 973 million, but there were estimates as high as 1.001 billion. So maybe it's not quite as bad as it appears on the surface, but it does point out that the U.S. continues to struggle in the global marketplace from a competitive price standpoint of trying to compete with the global exporters of wheat, and suggests, a relatively large carryover even into 2010, 2011. I did think it was of interest that they did leave the soybean stocks from a global standpoint at 59.73. The January estimate was at 59.80, but I assume they're going to, a million metric tons, that is. I assume they're going to make some adjustments to that sometime in March and April as that South American crop comes into full swing in harvest. Again, corn stocks globally at 134.04 million metric tons versus the trade estimate at 136.19 million metric tons. I think that's the positive number in this report. And from a global standpoint on wheat stocks, coming in at 195.86 million metric tons, that's not much above the January estimate of 195.60, but still a big number. So the market will take a little bit of time to, again, diffuse these numbers through the price discovery mechanism. I'm sure the market's going to have one eye over on the stock market. I thought yesterday's close in the stock market with the Dow below 10,000 suggests that, not all these financial problems and economic problems, not only here in the United States, but particularly in Europe and a good many countries throughout the world still points to an economy that is in question mark, but hopefully that will stabilize and keep moving higher. So probably the negative thing that still lies out ahead, we continue to hear from our scouts in Brazil and Argentina, virtually ideal conditions throughout almost the entire growing region. And of course, the big soybean crop will be coming into the global pipeline more aggressively in March and April, and we're going to have to deal short term, I think, with this big crop coming out of the southern hemisphere. Once we can kind of get that diffused through the market structure and priced into the market, then we're going to head into the growing season here in the United States and the northern hemisphere. And I do expect a high degree of volatility in 2010, much higher than what we saw in 2009 as far as price discovery. And I think the windows of trade are going to be much, much shorter in duration than we saw in 2009, which would point to essentially a much more volatile trade in 2010.